Hello, welcome back to the crypto trade management course. This is lesson 8, joined again by Bogdan the chef. Quick note before we start, as always, everything here is for education only. It is not financial advice, and nothing in this lesson is a recommendation to buy or sell anything. We're just simply here explaining how we think about trading today, particularly about taking profit, so you can understand the concepts and do your own research and always manage your own risk. So here we are, Chef, another lesson. What we've done so far, mate, is we have built lessons 1 through to lesson 7. We built the whole process, the mental game, reading the market structure, your risk framework, spotting setups, executing entries, and managing a live trade. So we've got it all here, mate. Now, back in lesson 6, we touched on partial exits as one of our managing one of the parts of our managing a position video. Today we're going to go all the way into the exit itself. So lesson 8, which is this one, is on taking profit. And for a lot of traders, this is the single hardest skill in the entire process, because guess what, man, we naturally get greedy, hey?
Of course, buddy. And honestly, this is the lesson I needed the most in the beginning. I could find the trades and getting it fine. I just could never take profit properly. I was either way too early or way too late. Every single time, buddy. Every single time.
And how many times did you get into a trade? You had a really good move on it. You're in very good profits, and then it turns around on you and starts to come back to you.
I think 90%, 90% of the time, but 90%.
Yeah, and it's crazy because you remember we started in the 2021 bull market, right, where things were just going crazy to the upside. But there was a lot of people that left that bull run without making any money.
Oh,
because they held on and held on and held on and held on, and their account went way up, and then they just watched it, disappear. So it's a skill that you very much have to learn and to understand that it's okay to take profit because you will get another entry, right?
Yeah, buddy, exactly. For me, it was a little bit different in that period of time because I wasn't a trader in 2020, 2021. I just bought the tokens, watch a lot of influencers. Unfortunately, for me, it was very good in that period of time because I make money. But I learned on the hard way when I start trading in 2022. Yeah, I start trading, and because you know how our mind is working, it's very difficult to shift from on 2 years in a row you buying tokens, swapping them, and you don't think about the especially the percentages, buddy, because we teach, and I learned from you this one, not to look on the amount of money and look on the percentages. For me, it was a very difficult shift, until I learned in this. And thank you very much for that, buddy, by the way. And no problem, because in my head was starting trading, all looking on the amount of money, and it was very difficult. And I wish to know this, to have this type of lesson and tools and everything what we build for our community, to have it in that period of time, much easier. But we learn on the hard way. And thank you very much, buddy, again. I learned because of you.
All good, mate. So this is a perfect segue into what we're going to talk about now. We're going to talk about why it's so hard, right? Because the concept of it only really makes sense once you actually understand the psychology behind it, which is a lot. Trading is all about the psychology, right? And once you understand the psychology behind these things, it can become much easier to manage and implement, right? So taking profit sits between two opposite fears, and the first is the fear of leaving money on the table. So you've got on for too long. You're always hoping for more, right? It's the greed side of things in us. We're like, but if I get out now, it could pump. And we often think about that rather than the what if it dumps right now as well, right? And so you don't want to give it up. You hold it for too long, hoping for more, and then you do end up giving it all back. And then the second fear is the fear of losing what you already have. So you sell far too early, and you cut a good trade short, and then every other trader lives somewhere in between all of that mess, right? Because there's two opposite ends of it. You hold on for too long, you end up giving it back, or you cut it too early and you miss a major move. And you got to somehow come up with an idea of something in between that. And here's an idea that kind of like reframes it in your head. And something that I like to use is that an open profit is not yours yet, right? The word unrealized is the most appropriate thing, because unrealized profit is just a number on a screen that the market can take away from you at any moment. So it only becomes realized or real the moment you close the position. So until then, you've not actually made any money. You've not made any money at all. You're just holding a position that happens to be green right now. And mate, I'll just quickly share a quick story with you, bud. I had this as well. I was in a render position back in 2021. I used to trade render exclusively. I was in a render position. I was up a couple of $1,000s. I drove from my house to the pub. I said, boys, I'm going to buy you boys a couple of beers because I'm in the money, right? I'm an awesome trader. Famous last words, because what happened was I got to the pub, went up to the bar, ordered the beers, got an alert on my phone. Guess what? Liquidated. Not only did I lose all the profit I was in, the market had a massive liquidation event, and I'd been building my position up like a fool, and my average entry was way above where I originally started buying. And it just took one liquidation hunt. And because my position size was so big and I put so much into it, so lesson learned.
And I think because of that, you start thinking about management risk, how you trade management risk. That's the reason. I think that is the reason. But that's the problem. We need to learn on the hard way, because we don't learn. If somebody else is telling you, majority of the traders, they don't know, it cannot happen to me, because you're thinking like that. So buddy, that's one, that one took me a long time to really get it. I have sold a trade way too early and watch it in run without me, I have held a good one all the way back to my entry and walk away with nothing, buddy, nothing. So I have the same story. Both of those hurts, completely hurts, and completing in different ways, and understanding why was the turning point for me. I understand. I understand now. I understand. In that period of time, no way.
Absolutely, man. And that's exactly the point, is because both of these mistakes feel painful, which is why people sort of like bounce between. Bounce between them, and so what we want to do is the fix is not to try harder to feel the right thing in the moment, right? Because we don't want to just go with our feelings, because our feelings really mess us up. It's to take the decision out of the moment entirely, which is what everything we've done so far in this course is about. It's about planning, right? Take the decision out of the moment and make the decision while you're calm and while you're rational and your emotions aren't getting in the way. So that's where the rest of this lesson is going to go towards.
Nice, buddy. I can't wait.
So the core principle of this lesson is simple to actually say, and to say you're going to do it, but it's hard, right? And so the exit has to be planned before you enter, not while you're in the trade. Just, and it needs to be just like your stop loss. Your take profit thinking needs to be part of the setup. So before a position is open, the idea that we teach is that you already know where the move could reasonably go and where you're going to take that profit on that move. And that's the important thing. Now, out there, you might be asking yourself, well, where does that come from? And that comes from the structure, right? So the concept is that the take profit is taken from the charts, the same as your stop loss. Your stop loss is planted on a long below a structural level. Take profit is taken on a long at a structural level above. And it's where on a long, price is likely to run into a little bit of difficulty, right? It's going to get up to that level and it's going to start to struggle to get beyond that point. that's a nice level where you go, you know what, it's starting to struggle here. I'm going to reward myself for this trade, and I'm going to actually close the position or some of the position, and then leave a little bit to run. But it's not a random number, and it's definitely not a feeling, right? It's something that you do before you get in.
So the take profit level get decided at the same time as the entry and the stop. Only one plan before anything goes live, buddy, no?
Exactly, man. And, and there's a second piece to this as well, because before you enter, the concept is to weigh the potential reward against the risk you are taking, right? So you have this risk to reward situation. And it's the distance to where you would take profit compared to where your stop is, right? So it's a ratio. So if I bring it up on the screen here, bud, to show you, you can see it here. This is an example on a Bitcoin trade taken last week, right? Entry is set. The risk is defined at below this reversal candle, and the reward is defined above, and it is a ratio. So the risk to reward ratio is 3.05. So you can see here that my reward is 3 times larger than my risk. And from there, you can decide that, hey, that is worth the risk because I'm getting 3 times the upside from what I'm risking.
Yeah.
So to be clear, we're not giving you any specific level or any specific, number here. It always comes from your own analysis and your own plan and deciding whether that risk to reward is worth it for you. But it's the principle that matters here is that it is planned in advance, right? Taking profit becomes executing in plan instead of making an emotional decision in the heat of it. The same as a stop. If you're trying to make a decision on your stop loss in the heat of the moment, you're more likely to move that stop down lower and take on board more and more risk. We want to do the same at the opposite end of the scale, and we want to make a pre-planned decision based on market structure before we get in the position. Because, that's the thing. If you're deciding it while you're emotional, then you're more likely to make a mistake that can come back. And we've seen, mate, you felt it, how quickly the market can turn. And it can really, really hurt.
Especially now, buddy. Especially now.
Yeah, exactly. So, here's the question too. So how do you actually take profit? And there are 3 core approaches to this. And the idea is not that one is best. It's that each one fits a different kind of trade, right? Same as the order types back in lesson number 5. So let's go through the concept. So concept number 1 is the fixed target. So what happens is you close the whole position at a single predefined level drawn from the structure. So it's clean and it's simple. So for example, if we talk about the example we have just before, I'll share that chart again on the screen here. This is option number 1. We enter the trade here and we get out there. It's clean, it's predefined. We've marked out our resistance levels over here from previous price action to the left. That's what that gray box is. And we go, okay, we've got the breakup structure. That's our clearly defined take profit. So that's a fixed target, right? We close the whole position. Now, number 2 is scaling out. And this is where we use the partials concept from lesson 6, but it's taken further. So instead of one exit, you might take a partial at the first area and then another portion further on, and then you leave a piece running. So in this particular example, we may decide that we enter here. We may then decide that we're going to take profit at this resistance level, right, which we've marked out. But then we may decide that we're going to leave some of the position to run higher, okay? So we only remove part of it here and we leave some running. We may decide, for whatever reason, based on the market, that we take a partial profit here as well. Right, we may have seen some other resistance here. We may have decided we want to take a little bit here. So we might take 25% away here. We might take another 25% away here. We might take another 25% away here, and then we leave a little bit, right?
Yeah.
That's another strategy. Option number 3 is trailing your stop loss. So instead of having a fixed target, the concept is that you trail your stop behind the move and let the market decide when you're out. So you give up like naming the exact exit in exchange for the chance to stay in a strong trend for longer. Because remember the saying, the trend is your friend until the end of the trend, right? And you want to get the most out of it. Now, it's not about picking the exact bottom, and it's not about picking the exact top. It's about following the trend until the trend ends. And in this particular example here on this trade, right, and I'll just delete these things here quickly. So you missed the bottom here, right? Let's say you've missed this bottom. Now this is your opportunity to get in, but you're still seeing a trend happen. So you're trading this until the trend ends. Now you may do all sorts of fancy things where you draw in trend lines, etc., and that's up to you. If that's how you want to manage it, you can draw in a trend line and you trade it until price breaks out of the trend. But in this particular example, we'll use this red horizontal ray as our stop loss. So we enter the trade, and every time it forms a little flag structure, and I'll get the marker out here, every time it forms a little lower time frame flag structure like this, and it breaks out and puts in a higher high like it has done here, then what we do is we move the stop to below the low. That's the higher low. So now all of a sudden, our stop loss is in profit. So worst case happens, the market nukes from here, stops me out, I've secured that profit, right? Then price moves up, forms another little movement in here, and you can zoom in on this on the lower time frames, and you can start tracking it. Well, that was a mistake, look at that. Okay. You can zoom in and you can start tracking these on the shorter time frames. And again, we've had a little pullback. We've had a candle close above, so we've got the higher high in here. So now we trade the breakout. We've got the higher high over here on this candle. So guess what? We now move the stop loss again. Yep. We keep doing it each time until price breaks the trend. And we say, okay, we've had a candle close outside the trend. That's it. Or the other alternative is, look at this, we've got another pullback, another breakout. We leave our stop where it is until price breaks out above to put in a higher high. And guess what? We haven't seen that yet. And look what's happening. Nope. All this time, still in this long position up here. Let's go back to a higher time frame so I can actually see what's going on better. And then look at that. Now we've had the higher high over here. So guess what? We can now move our stop loss up to the higher low, and we keep managing it as we go. And now guess what? Price is up above. It's come down. It's pushed up again here earlier today, actually, at 80,700. Yep. Guess what? I can move my stop loss again to this low. So now all of a sudden, instead of being in this trade that was a 3-to-1 risk to reward ratio, guess what we've had? We're now currently in a trade that, even if we get stopped out today, has given us a 7.4-to-1 risk to reward. Like, what a fantastic trade that is. And this buddy was the exact trade that I was in today that got stopped out earlier. Why? Because I was being too much of a smarty pants and I moved my stop loss up to there because this candle closed. See how that was a higher high?
Yeah.
I moved it to there instead of the larger structure there, and it stopped me out. But what a trade, right? That was my exact trade. There we go. 9.5 to 1. So if I'm risking $100 there, guess what? That's $950.
Exactly. You know? Good profit, buddy.
So instead of just getting in and getting out, which is a valid thing, but once you've recognized the market is in a trend, which we've done here, and that's the important thing, is we recognize that the market has moved into a trend. So the trend is our friend until the end. And we kept relying on that situation, keep going.
Yeah. But buddy, so how does someone decide which of these three to use on a given trade?
Yeah, it's a good question. And that's a question we get a lot in the community. And it comes down to the trade and the conditions, right? So you need to obviously decide before you're in. Like I mentioned just then, we knew that the market had moved into an uptrend quite aggressively. We had a big push based on news back on Wednesday night, and the market pushed. So we knew that we were looking for some continuation and some continued momentum. So that's where I decided on that particular trade that I was just going to follow the trend with my stops until I got stopped out. So it really just comes down to that. And for example, if something is trending like it is, you use rule type number 3 where we trail the stop. If something is in a range where it's just going sideways, then we trade the range only, right? Then it becomes a fixed positional move where we trade from the bottom of the range to the top of the range and we get out, etc. And sometimes it can be a blend, as well. Sometimes it can be a blend where you're not really sure what's going on, and it's acceptable for you to make the decision as well that I'm going to take a majority of my profit at this level, but I'm just going to leave a little bit hanging to keep going. And I know you like to do that, mate, as well.
Yeah, buddy. Yeah. Especially in this market condition, because I learned on the hard way. I don't want to be greedy anymore, like in the past. So that's the reason. For example, in that move last week, I take 3 trades and I manage all of them in the same scenario, take profits on the way. And I didn't expect that move, and that fast, but I was very happy, buddy. That's the reason I doubled the account.
Yeah, brilliant, mate. Brilliant. Brilliant. And because the thing is, there's no best way to take profit. The only right method for the trade is what's to trade right in front of you, right? But make the decision. So do your analysis at the time, make the decision at the time, and use one of those 3 methods. And honestly, even if you close the trade too early, a profit is still profit, right? And you've still been successful. And that's the thing not to forget is don't look at it and go, well, I could have made X, because you could have, but you could have also lost a lot as well, had you not taken the trade at the right time. So be happy that you've had a win, and there's always another trade that you can take. So let's move along to something else now. And there's a thing called, banking the base versus letting it run. And this is the thing where it can be a little bit of a bit of tension, where some people don't like to take that first profit and let some run. They like to just hold on and bank the bigger position immediately. Yeah. And we've found through some backtesting recently with our own proof of strategy within the community that taking a bit of profit to start with has proven to be more profitable for our community. So this is where you sort of get 2 fears from the start that you can sort of get resolved here by thinking about this concept more systematically. So what it means is, and as part of our our break-even protocol, I should say, is that we take a portion of the position off to secure some profit, and at the same time, we take risk off the table. So if I go back to sharing that chart again quickly, this is what I mean, because it has a real big psychological effect on you. So for example, if we look at this trade here, and we originally had planned that we were going to always take some profit away at this particular area here where my cursor is. Then what we would do is, as price comes into that area over here, we would then remove 50% of our position at that level, and at the same time we would move our stop loss up to our entry point here. So the psychological shift is, no matter what happens now, all of a sudden this is a winning trade no matter what. Yes, it might not ever make it up to my final TP, which I've decided is up here, but at least it is a guaranteed victory of some kind. Now, the trade-off of this is, which is where people need to decide, which is where it creates this issue for people that requires some resolution, is sure, because we've removed 50% of our position here, this remaining move in this area now yields 50% less profit than it might have before, okay?
Yeah.
But what you've done now is you've guaranteed a winning trade. If you don't take profit at this first point, obviously at any moment, this can be taken away from you because everything remains unrealized. Whereas now you've already realized some profit and you're leaving a bit left as unrealized. And for me personally, that works really, really well psychologically for me. And that's the important thing for me, is instantly I become comfortable with my trade. When I've taken some position away, I've realized the profit. I've realized to myself that the trade's a winner. Stop losses move to entry. It's impossible for me to lose now. And that really is psychologically very powerful for me. So it also allows me to then not get psyched out of these trades and close them out of panic later should I get a little bit fragile mentally.
Yeah, but same for me, same for me. The moment I start securing a base, I could actually let the runner run for the first time, because the pressure was gone. No more pressure. And I also in this way, I can leave a trade over the night. I can sleep very, very well. Very, very man. It was so easy now because you don't have fear anymore. Yeah, the fear is disappeared. You bank your profit, like you can see, half of them, I'm relieved. And that's the reason I changed my trading style like that, and I like to take profits on the way.
No, exactly. That's perfect. That's a great word for it. And you can leave these runners overnight. You can manage them. You can also then decide to manage them with the trailing stop concept.
Yeah.
Where the stop follows the structure and all of that. But you already guaranteed yourself of a win as well. So sometimes doing a combination with removing a part of it at take profit number one and then trailing the stop, that's great because you can really, really take use of the trend, take use of the profit taking, and those random liquidity pullbacks that we get, they don't hurt you as much as far as unrealized profit disappearing. So it's good. And the goal is not to have a perfect exit, right? It's about having a repeatable process that repeatedly yields you profit, right? It's not about getting to the ultimate goal every time because that's not going to happen. It's just having a nice repeatable process that just keeps ticking up the balance in your account, yeah?
Buddy, that is a relief to hear, honestly, Chasing the perfect exit is exhausting and you get tired.
It is, man, and it's actually a trap because you see a lot of influencers talk about how I caught the top, I picked the bottom, blah, 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 blah. Well done, because how many times have you failed to do it? You know what I mean? Like, it's not easy to do, and you don't need to. I mean, look at that example that I showed over here, right? This is not picking the bottom, right? The picking the bottom would have been trading this mess down here in a low volume period on the weekend when the market was looking weak, right? That would have been literally a guess and getting lucky. Yeah. And I could tell people, I picked the bottom, but I still got into here based on market structure, traded with the momentum, and it turned out to be 11-to-1 risk to reward ratio. I mean, there can not be any complaints about that. Did I sell at the top? No. I got a nice chunk right in the middle. And that's the difference, is profit was banked part way up. The rest of it was chased. Great trade. And as long as the balance is going up, that's the thing that really, really matters.
Exactly, buddy. And buddy, but I don't know if you realize, but also what you're explaining here and teach our viewers, our community, it's also valid also for investment. Yeah, because people, they don't realize, but they listen everywhere, all the social media, all the influencers. Oh yeah, Bitcoin is going to 1 million. It's printing in your brain and you don't realize. And you start investing, for example, it's not necessarily Bitcoin, whatever project, crypto or stocks. And you have that one there and it's getting very close. And for a couple of bucks, sometimes you don't take profits.
Yeah.
So it's exactly the same thing. People don't realize that. But yeah, buddy, good lesson, buddy. I'm very happy what you're teaching.
So let's just pull it all together. And we've actually put together a cheat sheet once again. So you're watching this, you can join our community by clicking a link in the description. All you got to do is enter your email address. You'll get taken straight into the free community. In the free section, there's a free resources section. You can go in there and grab any of the cheat sheets. Plus, we have a macro dashboard, a position size calculator, all sorts of cool stuff. We put all of these concepts together into a simple checklist for you, and it'll be a nice little reference for you. But here's some of the things to talk about, right? Unrealized profit is not yours. An open profit is essentially a loan from the market, right? Until you take it.
Yeah.
You take the profit. Plan the exit before your entry. So the take profit areas are derived from the market structure, same as our stop loss. And you want to decide that calmly up front. You want to match the method, the take profit method, to fit the trade and to the market at that time. So we talked about that, having a fixed target, scaling out of a position, or trailing your stop loss if you're in a trending market. There's banking a base as well, which is what we call our break-even protocol, where we take a little bit of profit away at a certain level and we move our stop to entry, because that then removes the risk. It lets you breathe. It lets you breathe mentally as well as financially because you've banked some of the profit. And then make it repeatable over being perfect. So you never want to be striving to nail the bottom or nail the top. You want to have a process that can provide you with repeatable wins. And that's the big thing, because the compounding the wins makes the difference. And that is the thing. You hear people talk about your edge. What is my edge? Well, my edge is that it's a repeatable process that provides me with consistent profitability. I don't need to pick when the market's about to pump. I want to know when to get into it when it's pumping and get out of it before it stops pumping, right? That's the thing.
Yeah.
So that's the framework that we've been through for lesson 8 here. We've got 5 concepts to understand. We'll get it all on the cheat sheet. What do you reckon, Bogdan?
Yeah, buddy. That's it. I like what we're teaching today, because I think it's the most important thing, because I remember, and I saw some examples this week in our community, because imagine that, and the most fear also appear when, if you are lucky, now sometimes it's happening, because remember how many times people they try to catch the bottom on a trade, and less than 1%, and finally you are in that 1%, you catch the bottom. And after, because of that, you don't take profits, because you look, oh, I catch the bottom. So
you're also the one that sells. Yeah, you're also the one that sells last, because we hear it all the time, because people talk about, oh, I got my entry at such and such a price. Well, that's all well and good, but it's about the difference between your entry and your exit that really matters. So, there is a saying, you know what happens when you try to pick your bottom, right?
Oh, no, I don't know.
You get stinky fingers.
Right?
Picking the bottom can come with risks. You can get burnt.
Yeah.
So
exactly.
Quick one, mate, before we wrap up as well. So, like I said, everything's summed up on a single page in our free resources section inside our TMM community. So go in there and check it out. If you also want the full structured pathway, all of these lessons are laid out in order with deeper material behind them. A lot of these concepts we talk about for in excess of an hour. And some of these modules, like for example, risk management is a module that we're doing at the moment inside our community. And I've got a live workshop coming up in an hour and a half from now on risk management. We're doing 9 different modules. So we're spending sometimes in excess of 11 hours just talking about these particular concepts. So there's a lot there. If you want that, that's inside of our Mastery Hub. It's a paid setup for anyone who wants to get in on the process. But you will find it inside the community once you join. There's obviously a membership fee, but inside of that, you get so much more, exponentially more information. But the first step is to jump into the free community and see what you think. Drop us a comment as well on this video with the part about taking profit that you find the hardest. Is it selling too early, holding too long? Bogdan and I will go through and read them, and we'll comment on anything. And last thing before we go, remember as well, right, this is all just educational only. It's not financial advice. So always do your own research and manage your own risk. Chef, what a good session today, buddy.
Yeah, buddy. And I hope, I hope our viewers don't miss this session, this lesson, because in my opinion, it's very important. And I saw that in our community also. People, they concentrate to have the perfect entry, to have the perfect setup, putting there, yes, it's going to, but they think the less on the take profit part, which is very, very important. Because like you explaining very well, unrealized profit is not a profit. So
exactly,
it's a very important lesson about this. Thank you for that, buddy.
All good. All right, let's wrap it up there. Thanks everyone for tuning in, and we'll see you in the next video.
Yeah, take care. See you guys. Bye bye.